Hi, I'm Tim Hungerford, and today we're going to teach you when to debit and when to credit. Today we're going to talk about a very scary subject, debits and credits. It's one of the hardest concepts for new accountants to understand, but we're going to try to break that down a little bit for you today, because you'll get an assignment where you'll be asked to do a journal entry, where you've got to list the accounts and know whether it's a debit or a credit and what amounts to put in there. We're at least going to break down understanding debits and credits today. So let's go over to our chart on debits and credits. First off, let's set the chart up. We've got debits on this side, credits on this side, just like you would see in an accounting journal entry. But what we're going to do for your understanding is we're going to put a plus, a minus, and a plus, and we're going to read it like this. Accounts that are in this debit category are going to go up with a debit and down with a credit. Anything we put in this credit side is going to go up with a credit and down with a debit. So let's talk about what goes in these charts. Debits normally go up with assets. All right? So cash is the typical asset. So when I receive cash for selling pizzas, that's going to be a debit. And when I have to pay that cash out, it will be a credit to cash. Let's jump to the credit side for a minute. Just like our accounting equation, we're going to have liabilities and equity on the credit side. Liabilities go up with a credit and down with a debit. So accounts payable would be our typical liability. We get something from a vendor, we don't have to pay it right away. That's a liability. So that accounts payable is going to go up with a credit to show that we owe that vendor. But when we pay that off, it will go down with a debit. So that's how the debits and credits are affected. The hard part is the income statement. So remember, there are really two key components to the income statement: the revenues and the expenses. What do revenues do? They make our equity go up. They make us worth more. So they're going to be on the credit side. When we sell pizzas, that's going to credit revenue because it's going to make our revenues go up. But when we have to incur expenses for the pizza dough or the people working on the pizzas or the pepperoni or the cheese, those expenses will go up with a debit and down with a credit. So expenses and assets wind up being debits. So if you remember, debits have assets and expenses. We're going to focus on the X there. And credits have liabilities, equity, and revenues. If you remember DAX, debits go up for assets and expenses, and credits make liabilities, equity, and revenue go up. If you remember this, you will do very well on every journal entry that you have to do in your accounting. We'll discuss some of the accounts and other things in further lectures. Plus, what I'd like you to do is let me know what else you'd like to hear about in the comment section. And remember to subscribe so when I post a new video, you'll be able to see it right away. Thank you again and have a great day.